Something is happening inside Meta. The company behind Facebook, Instagram, and WhatsApp is facing a moment of intense pressure. Reports are swirling about massive job cuts while the company pours billions into AI. Into the future of artificial intelligence. This is a story about big money, big ambitions, and the very real human consequences that follow. Meta's platforms touch billions daily. Boardroom decisions today will shape tech's future tomorrow, and they could affect thousands of livelihoods and set a precedent for the industry. The core tension is simple. Meta is spending unprecedented sums to win the AI race, but its flagship model, codenamed Avocado, is reportedly delayed and underperforming. That creates a hard choice for Mark Zuckerberg. Cut costs hard, keep investors calm, and keep building. A dramatic pivot. A leaner company run by smarter machines. It's also a response to rivals like Google and OpenAI. The numbers are stark. Reports suggest Meta could lay off up to 20% of its workforce. With about 79,000 employees, that's roughly 16,000 jobs, bigger than the 11,000 jobs cut back in 2022. For thousands of families, uncertainty and anxiety grow overnight. Even at top tech firms, job security can be fragile in strategic shifts and market pressure. The justification: new AI tools could multiply productivity, doing more with fewer people, reduce payroll, accelerate development cycles. On paper, it's a cleaner machine, but shockwaves would hit tech hubs, especially the Bay Area. 16,000 skilled workers flooding the market raises competition for roles. Housing, small businesses, local economies feel the pullback. Inside Meta, rumor cycles crush morale, stall projects, and freeze decisions. Behind every headline are personal stories we can't afford to forget. Meta's AI commitment is staggering. Reports point to up to $135 billion by 2026. Not a casual investment, an all-in bet on the company's future. Building massive, cutting-edge data centers, purchasing hundreds of thousands of specialized AI chips from NVIDIA, funding immense R&D and paying top talent to build the next wave. Rivaling Microsoft and Google, this is table stakes now. A leading AI model isn't a luxury, it's a necessity powering features across apps, smarter recommendations on Instagram, better chat on WhatsApp, a richer metaverse. But spending big doesn't guarantee success. AI is unpredictable and hard. A rival can break through with less, miss the target, face reputational damage. The cost of entry is soaring. This game favors giants. Meta is using ad dollars to fuel a moonshot, and the world is watching. At the heart is Avocado, Meta's move from open source to a closed proprietary model. After Llama 4's lukewarm reception, Meta pivoted to go toe-to-toe at the top. Original target, March 2026. Now, pushed to at least May, maybe later. Internal tests say performance falls between Gemini 2.5 and 3, below Meta's target. Ship a not best-in-class model, or spend more time and money and risk falling further behind. Nightly benchmark fires show the pressure. Constant tests, constant tuning. Top-tier LLMs demand money, data, brilliance, engineering, and impeccable timing. Even with huge resources, leadership in AI isn't guaranteed. The delay speaks volumes. This is Meta's most consequential tech test in a decade. Avocado's struggle forced Meta to consider the unthinkable: licensing Google's Gemini to power WhatsApp, Instagram, and Facebook. A temporary fix to keep features competitive while Avocado cooks. It's a humbling signal. After billions on AI infra and research, it implies the pipeline, including the 14.3B scale AI deal, can't meet the timeline yet. Pragmatic, but demoralizing for teams who want to win in-house. Short-term, better search, chat, and creative tools for users. Long-term, dangerous dependency. Google gains leverage over Meta's core. It buys time, but exposes the gap between ambition and reality. The pressure to deliver a world-class model is boiling inside Meta's AI unit. Avocado's delays and misses put leaders in the hot seat. Chief AI Officer Alexander Wang, brought in via a 14.3B scale AI deal, faces scrutiny. Yan LeCun, Meta's longtime chief AI scientist, left to start a new venture. A major blow amid 600 cuts at superintelligence labs. Sources describe nightly benchmark fires. Officials deny chaos, but teams look stretched. High pressure breeds burnout and attrition. Hard to solve hard problems that way. Stability, morale, and a clear plan are now as critical as the tech. Zuckerberg's challenge: retain talent, reset focus, and guide the rebuild. When layoff reports hit up to 20%, the market moved fast. Meta stock climbed nearly 3%. Cold logic, lower costs, higher margins. Investors reward decisive leadership and fiscal discipline, especially if AI is the focus. Signal sent, workforce reductions for AI efficiency get a green light. But the hidden cost, culture, morale, and creativity can decline, hurting long-term innovation. Short-term profits can overshadow what sustains companies over time: people. Meta isn't alone. This is part of a broader shift sweeping tech. Block cut up to 40%, citing intelligence tools. The claim, as AI improves, fewer humans handle the same work. What was theoretical is now policy. People are feeling it in real time. Job security is tied to performance, AI strategy, and the stock market's mood. Reskilling and retraining become essential. What should governments and companies do? OpenAI, led by Sam Altman, GPT, set the modern standard. Google's DeepMind with Gemini, Sundar Pichai's empire pushing hard. Microsoft under Satya Nadella, deep integration across Azure and Windows. Anthropic's Claude, safety-focused research. Elon Musk's xAI with Grok, an alternative path. NVIDIA sits atop the hardware stack. Jensen Huang's GPUs power training and inference. Access to chips has become a strategic advantage. New models arrive every few months. Pace is brutal. This is a marathon with sprint rules, toward AGI or bust. Meta stands at a crossroads: soaring AI costs, a delayed flagship, and looming layoffs. The path will define Meta and signal the industry's direction. 1. Official announcements. Spokespeople call reports speculative, but watch for concrete restructuring or spend changes. 2. Avocado or a Gemini deal. Strong avocado benchmarks vindicate the strategy. Licensing signals outside help. 3. The competitive landscape and the human impact. Support for departing teams matters. Meta's choices are a live case study for this era. Caution and wonder, both are warranted.